Hey guys, so just another day in the LNB office. So as you can see, a lot of things have changed. Got myself a new speaker with a little bit of light, for some action. And then we got a blue light at the back, which you can't see now because it's daylight. But besides the point, guys. Center trade set up in the Luke Bridges trading group completely for free with 16,000 members. So a lot of the members took this. 3,000 people actually saw this trade, and 3,000 people potentially took the same trade setup, which was really cool. So we did this. And you could see yesterday we had a small loss on eurusd, and then we took a gold trade yesterday, which was really good. Managed to catch the buys, and there's the USD CAD that we took, and we profited about $1,000 on that trade. And up so far on this trading account, started with 100,000, up 34,000 on my Vantage live account. But besides that, guys, let's jump to the charts.
Nothing in this content is financial advice. All information shared is for educational and entertainment purposes only.
So in this video, guys, I'm going to explain to you a double top pattern, meaning that we have 2 points that touch your resistance level, and the double top pattern is a bearish sign. So how can we identify this, and how can we take advantage of this, and how can we enter a trade? So firstly, you will see that we, on the left hand side, if you start from this area, we can see that we are in a bullish trend, and then what ends up happening is we continue bullish, a bit of consolidation, we hit the top, so a higher high. And then basically what ends up happening is we reject off there, come down to create a level of support. But guys, always remember that this could be potentially a level of, this could just be a higher low. So something just to wait for before we just have confirmation of what's going to happen. And then we see that we get exactly more or less, so you can see that price perfectly tapped within these two levels. And when it tapped into that level, obviously it rejected again. So we know that price doesn't want to push any higher than this for now in this movement. So what ends up happening is we mark out our neckline because we know this was a level that was respected. We wait until price rejects off there, see how we respect this line, so see if we can. You can see that price obviously tapped into here for liquidity. We came back down here, and what we just looked for, so the lowest point on here was, so draw this little trend line here. You can see that price obviously tapped into this level, so we perfectly respected that as well. You say that's your lowest point, and what we were waiting for is price to reject off this level. And then when we saw price was rejecting off this level, we could have firstly maybe entered on this, but then our stop loss would have been up here, or I said more or less, and then this could have turned into a 1-to-1. Just so that at any point we could still come up, grab liquidity into these levels, because we saw there was a lot of liquidity in those zones. And then basically what we were waiting for is, so if we took a position on here, I would have been comfortable like on the break of this. So we came back, retested this level. So we took a level on there, for example. I would have put my stop loss above here, because then otherwise we're going to reject. And this would have also been a 2. So this one would have been a 2.5 risk to reward, because I would have held it down to the bottom here. Obviously, once it starts breaking below, we know that, we start moving our positions, start moving stop loss to break even, especially once we break below here. It should just be one clean drive, because we have all of this on the left, but we've got to pay attention that at any moment we could stop, grab liquidity, market structure, we could have consolidation as well before making, before bouncing to these levels. So we started to manage positions, but I just want to remove that. But if, for example, you took the second position, so you took it on the break of this candle, you saw that the candle broke down, maybe you wouldn't have gotten a perfect entry, but you would have said, okay, this candle breaks again, we're going to enter on this position, and we would put our stop loss here, knowing that if this candle is going to run, it's going to run all the way down. So that's what we all based our analysis off. But if at any point this candle can just be a bottom wick for us to end up going to highs again. So we understood our risk here. It was a nice 2.62 risk to reward on this trade as well. So always remember, a double top position is a bearish sign. Whenever you see price rejecting more or less on the exact same point, like it's almost identical, know that we could have a potential reversal on this, is a bearish sign. So you can use this on any, obviously, time frames, on, I like to use, if I see a pattern, I like to obviously use it on higher time frames, just because it adds like that extra bit of confluence. On lower time frames, it still can be valid, but always remember that these patterns can also like be very random. It could just be, oh wow, there's a double top, or there is some confluence on there, for example. Like it just could so happen that it happens like that. But on a higher time frame, obviously price takes a lot longer to formulate, so that's why it's better to take like these type of patterns on, let's say, a 15 minutes or 1 hour or a 4 hour chart where there's more confluence, because on the 1 hour it looks the same, just to get your entry, you would break it down. So I'm basically on the 1 hour as well. It would look the same. You see, you do have a double top there as well, just to show you over here. So that the point is validated. You can see we typed that on the top wick. It was just easier for us to find our entry on the 15-minute to see how price is exactly moving. So that's a double top pattern for you guys.
So guys, we're just gonna have a breakdown of gold, see where the price action is at the moment, see where I think price of gold is gonna go next based on my analysis and based on my strategy. So today is obviously Wednesday. Gold price is currently sitting at 4,151.24 of this current recording. Now we can see something. I just wanted to go on the 4-hour chart because I found something interesting on the 4-hour chart and something that I wanted to look through. So we can see, always make sure you go on the higher time frame, especially when we have, let's say, a big push. Now, this wasn't anything too crazy, but we got to respect the level that we pushed from below, which was our demand zone. We pushed up, we've tapped into this level a few times before breaking out from it. So we know that this level was clearly respected. We followed up by 4 bullish candles, which put us into our next range. And this is what tapped us into our level of resistance. Now, where did we get that level of resistance from? We saw that we had price action over here before pushing back up. Now, again, what I'm seeing, which has similarity, again, you can't always use the same price data as before because anything can change in the market, due to factors, economic data, big news events, etc. But we can have a look at this and say that, okay, we saw that price pushed up. Now, again, it didn't push up from all the way down here. If we look far left, sure. But if we look at here, how price reacted, we sort of tapping into this level, same as before. We came back down, which we did. We came back down exactly to more or less this level, and we bounced. We had a retracement from there, and now we're pushing back up. So again, this can give us a good indication because if we have a look at this, we can see that, let me just do a horizontal line. We can see where the lowest point over here was. It was a bit further down, but we can see where these candles were. Didn't quite tap into this level, but we can see we tapped into these levels below, not at the lowest point. We can see that price is more or less following this price structure, which is fine. Now, again, what I predict the price of gold will do throughout this week, potentially this week, if we're not going to continue to consolidate, if we break back into this range, we'll just see some consolidation between these levels. But what I'm looking at is gold potentially to do something like, what I expect gold to do. You can see that I drew this orange box. I've drawn this here. I'm going to get to that shortly. So you can see if gold ends up pushing up now and we break above this level of resistance, act as a level of support. Once we break above this and close above that, what I normally say, guys, it's quite simple what ends up happening. We end up just having one clean move to the upside. If that's not on a 4-hour, if that's not on a daily candle. But generally what happens when we see this, why I call it clean traffic, is because there was no price structure that happened and formed between these levels. There was no green candle that formed between this. We just had bearish candles that pushed to the downside, meaning that at any point we just can take one solid green move and it will just push through and tap into our previous supply zone. Now again, guys, this is quite high up. It's going to re-tap into our all-time high levels, which I expect gold to do. At any point it can do again, but that's just based on my analysis. Now again, always remember that we could have a certain factor that, if gold rejects from these levels, we can always end up coming down, tapping into these levels, which can see that respected there. So if we tap into this, take out our previous day's lows, respect this level as a level of resistance, and then I'm coming and tapping back into your demand zone. Now again, we've already respected this demand zone, but it is a level we got to pay attention to. So let's see how gold plays out. If we break above here, close above there, we know that we can at least tap into these levels. We can see that we can aim for this next level of, as a level of, we can see that this can be a level of previous. Now it can act as level of resistance, so we can see how we react once we tap into that. Once we break above there, tap back down in these zones and push back up, then we have a better direction of, okay, I'm more comfortable taking trades within this area because we can see that, there's clean traffic there on that side. We shouldn't have much struggle once we tap above them. So once we start seeing the clean move, we can just trail our stops within these levels. But obviously, guys, remember, we are tapping into a level of resistance. So at any point, we can just break down and tap into our demand zone again. So that's the update for today, guys. Just going to break down the Euro-USD chart. Now, I broke down the 4-hour chart on the gold, so I thought I'd do this the same on the Euro-USD just to switch it up a little bit so that you guys can understand how to utilize different time frames. So current time of this recording, The EURUSD price is sitting at 1.15851. And currently what's happened on price so far this week, we see that we had bullish candles pushing up to the upside. So this week we're looking bullish on EURUSD. Now again, what happened today, we woke up and price pushed above the previous day's high, and now we're coming back down to take out the previous day's high. Now we've got to pay attention to, at any point we can tap into these levels. I think this is where we're going to go next. We had some level of resistance over here. This was a level of support clearly respected when we came up before, pushed above, obviously tapped into these levels, which we haven't just yet. So this is what I predict. Price will go and tap into these levels before coming back down, making its next move. Overall, minor level to tap, but will be our directional move once we tap into that. If we break above this and close above this, we know that we can push up to our supply zone. Now let me get to my supply zone and why this is important. So I noticed this on the 4-hour. Now this is a level that hasn't been tapped into. You can see we followed by a few bearish engulfing candles, pushed back down, but we never quite tapped up into these levels just yet. So now that we are pushing bullish, we have to pay attention to higher time frames and where we can take the bias off of. Predominantly at any point, we also could break below these levels and become bearish. But again, we've had some strong momentum and it is Wednesday. So overall, I think the week's going to end up tapping this level if we don't do this by today. But let me just show you the drawing of what I think is going to happen. So I think at any moment, this is what's going to happen. We're going to tap into here, potentially come back down here, grab some liquidity for us to push into these levels. These levels, you can see we had a lot of accumulation during these levels. Potentially tap above here, come back down and tap into our supply zone. Wouldn't be that smooth. We obviously have to go through price action, price structure in order to get there, but this is what I'm predicting that should happen on the USD based on my analysis and how price moved aggressively at the start of this week. But at any point, we could come back down, tap below this level, which is a level of support, act as a level of resistance, take out our previous day's low, and potentially make our next move. But then we have to pay attention to lower levels. So we could come all the way down to these levels. But overall, looking bullish. So I'm going to be looking for predominantly buys on EURUSD when I get the opportunity. So any sort of pullback I get, taps into our level, we break above these levels, we should get some good entries, guys. So thanks again for watching, and I'll catch you on the next video.
Guys, so I'm planning on transitioning to a daily channel soon. So what my goal is, every Monday, Wednesday, and Friday, I do obviously market analysis and market breakdowns. But what I want to include more is obviously education side of things. So I'm planning on either structuring it in with the market analysis or just pre-market analysis, so you get a little insight and a little value just before we go into the market analysis. Or I post on other days that I don't post the market analysis, so Tuesdays and Thursdays just for educational purposes. So in this, you'll get understanding trend lines, market structure, you'll understand like supply and demand, support and resistance, you just get a clarity of all the basics. I even show you new tools, new features on how to use TradingView. So anything that you ask in the questions or in the comments, or any question that someone asks me on my Telegram group, I will answer it there or go into an in-depth analysis there so that, I don't spend too much time answering, singular questions, because some other people do have the same questions, but maybe they're just too scared to ask, or they're just maybe too shy because, back in the day, I used to always feel like I don't want to ask a question because I might seem stupid or I might seem silly, but that's not the case with me. But I understand everyone is different, so I want to give everyone a fair chance. So a lot of you guys have the same questions, maybe structured in a different way. So this is going to be a lot of value for more structured educational content, which you guys will enjoy. So guys, subscribe to the channel so you don't miss the next video. Hit the like button and leave a comment. So I respond to everyone's questions personally because I like to get a better understanding of my community and of my group. So I like to do this, read through them, get a full understanding, and that's why I respond myself. And it's just better overall for myself and you in order for the channel to grow. Also guys, a quick reminder, if you want to see my daily analysis before it goes on YouTube and observe the trades in real time for educational purposes, join my free Telegram group. The link is in the description. Thanks for watching guys. I'll see you in the next one.